Oil funds more than 90% of South Sudan's budget. However, since war broke out in neighboring Sudan in April 2023, production has been negatively impacted. Damage to the pipelines from the fighting forced a halt in extracting oil in February last year. Supplies such as the chemicals needed in oil extraction could not reach oil fields. They usually come through Port Sudan on the Red Sea. But South Sudan's government now says all is set to resume oil production.
There were several concerns from the partners about the technical readiness of the pipeline, lifting of force majeure, and security assurance. But those concerns were addressed by letters, the company responsible for pipeline, on the readiness of the pipeline itself, and a recent letter from the Ministry of Energy and Petroleum, dated the 4th January 2025, for the official lifting of force majeure, which bring all the parties into one agreement of resuming immediately.
South Sudan's government largely depends on oil money to fund its operations and development costs. The government says the absence of oil money in the past 11 months has resulted in civil servants not being paid salaries. Many here say in order for the oil money to have a positive impact in the economy, the government needs to fight corruption and better manage money coming from the petroleum sector. Some analysts say South Sudan's government should try to diversify the economy away from a reliance on oil due to war.
If you spend a lot of investments in the private sector, you expand the private sector, you expand the tax base, and you get more money from non-oil revenue. So the best option is having a national budget, financing the economic growth, and then taxing government people, and then realizing a high-level income from taxes.
South Sudan's government says its target is to produce 90,000 barrels per day within the next 6 months and thereafter increase production. Patrick Oyet, CGTN, Juba, South Sudan.